Hi everyone and welcome to my morning report analysis videos on Tuesday 21st of March with me, Rich Market Analyst at Antec Markets. We've got a sort of relatively interesting start to the trading actually. We had earlier on not a great deal of direction, but markets have taken direction from a couple of factors that don't involve the dollar actually normally. I say abnormally. Dollar is actually falling, but that's not coming about due to interest rate differentials. The treasury yields are higher on 2-year and 10-year. It is coming basically on the back of the strength of the euro and now subsequently strength of the sterling. Now, the euro has strengthened overnight on the fact that Emmanuel Macron was seen to be performing well in the French presidential debate that happened last night. It sort of reduced the risk of Le Pen victory really, and what we're seeing is this yield spread between German and French bonds just mildly ticking lower, and that generally tends to help support the euro. Now, you've also seen over the last sort of few minutes really the UK inflation data coming out. Now, UK inflation has spiked higher, really strongly. Above 2%. Now the Bank of England's target is 2%, and it's gone from 1.8% to 2.3%, so it's accelerating higher. And let me just show you that on the chart. Accelerating higher now on this UK inflation, and it's now the highest since September 2013. So really strongly increasing inflation there, and not only that, we're seeing input prices still eye-wateringly higher at 19%. So generally speaking, this is tending to sort of pull sterling higher. Now sterling is around about 90-100 ticks higher, adding around about 50 ticks on the back of that inflation data alone. So we are seeing some really strong gains on sterling today breaking out, and that is sort of helping to keep the dollar down. Although across the majors, other than that, the dollar is actually fairly positive, but against euro and sterling, not that much positive. Now, what we do have also is equity markets, which are basically flat on the day, nothing too doing. They're sort of relatively mixed, and I suppose if you look at the French CAC, that's outperforming on the back of the Macron showing in the election, and the sterling strength tends to drive FTSE lower, and that's subsequently why we're seeing sterling underperformance. Generally speaking, markets are fairly mixed, and that is the outlook today. In terms of what we've got to look forward to, more Fed speakers today. You've got Bill Dudley, the New York Fed president. He tends to be sort of, or has historically been more on the dovish side, but a little bit more hawkish in recent speaking. But it'll be interesting to see what he says at just after 10:30 today. But also you've got the US current account, which is expected to again deteriorate. Where is it? There, US current account to 128 billion, which again, that would be quite a strong deterioration in that current account. So that generally wouldn't tend to be seen as dollar strength. So that takes me to my chart of the day, which is the Aussie dollar. Now the Aussie dollar has been rallying in the last week or so, strongly so actually, up towards that 77.50 mark. Now if I sort of zoom out, you can see how 77.50 tends to be a bit of a ceiling, doesn't it? Around about that sort of level where the resistance comes in. 77.77 is that key November high, but around 77.50 it tends to be where that sort of rally has been falling over, and you can see that the Aussie is actually in sort of quite a long-term trading range, isn't it? And 77.50 tends to be sort of peaking in that range, and it'll be interesting to see if we can gain traction in this move higher, because to be honest, today's trading is sort of relatively mixed. Initially had been sort of reacting lower, but just regained a little bit of poise as the dollar's come under a bit of selling pressure on the euro and the sterling, I think. But generally speaking, I think around that 77.50, 77.40 to 77.50 mark, I think is a key resistance area, certainly near to medium term, and also on a long-term basis as well. Now, it'll be interesting to see what happens with these momentum indicators, because the stochastics are starting to sort of roll over a touch. MACD lines are not really where you'd expect them to be on a market that's really pushing on key resistance areas. So I think there's a little bit of sort of uncertainty with this move higher. The Aussie has also been on the hourly chart, where the gains have been seeing in the last sort of week or so. You've got a marginal sort of bear bias on both the RSI on the hourly chart and also the MACD lines. So the MACD lines would probably be the ones I'd focus on there, because they are far more sort of neutrally configured than the RSI is. But certainly I think, well, I wouldn't say that the bulls are in complete control, certainly with this sort of overnight drop away. Now if that support around sort of 77 figure holds, you could see another attempt at the highs again, but to be honest I think this one is a market that could be running out of a bit of steam to the upside now, and it'll be interesting to see if that sort of resistance around 77.50 does actually sort of put paid to this little rally again, because I think ultimately the Aussie is not going to be moving too much higher, and I don't think it's going to be having the rocket fuel that breaks it out to the upside. Certainly looking at this daily chart where you've got all this overhead supply from 2016 around this sort of level, I think I'd be very surprised if we do break to the upside, but it's a market I think worth looking at now. So I wish you good luck in your trading, and I'll speak to you later. Thank you.